Hi guys, this is the 1st of June and we're at the end of the day. This is somewhere close to past midnight, but I'm in the US and currently we have a day here in the US. I'm here on a visit and I've been tracking the markets though, because that's the real passion that I have. And this video is about presenting the plan and how it transpired through the day. So basically, what we do is we release a few things in the morning. We release this plan, which is the index trade plan, where we release the data on Nifty and then on the Bank Nifty. I will take you to my Telegram channel where we'll see how the plans are released. These are the things that are released on the Telegram channel. This is the premium channel, which is the paid version. So we will have the Nifty levels for the day. We will have the plan that I just was talking about. We'll have a day chart plan which will tell you how this entire plan looks on the chart. Similarly, we will do that for the Bank Nifty. And then we will have a small snippet that I release in form of a shorts video on YouTube, which gives a basis for everyone who doesn't want to look at charts and just wants to know the levels. He can go to this particular short 1 minute video and we'll get all the levels for Bank Nifty and Nifty. And then I have begun to cover copper, crude, gold, natural gas, silver, and zinc. Now these are things that a few of you have requested and I've added as the request came in. So basically what we are doing is, I will just explain what we are doing. So here what I'm going to do is, I'll take the case of the Nifty here. So if you see the chart plan, this is how it looks like. The red lines are the resistance levels. We will have an R1, we will have an R2. Similarly, we will have an S1 and we will have an S2. And then on the chart, we will have a green dotted line, which is the buy above line, and a red dotted line, which is the sell below line. So the plan is that as the prices move through the day, if you find that the prices move above the green line, we are supposed to trigger a buy signal. We are supposed to trigger a buy trade, and we need to take the R2 as our target. And if we see that the prices travel below the red line, then we have to trigger a sell trade. And the first buy level, the first destination is the S1, and the second destination that is a target is the S2. So this is the plan in entirety for all the chart releases that I make. So if you see, this is going to be the chart release for the Bank Nifty, and similarly you need to buy above the green line, you need to sell below the red line, and if it crosses the green line, this is R2 is your first target, and anything above R2 is a bonus, and if you wish to take it, you can take it. If you don't wish to take it, you can close your day at R2. Similarly, after the red line, S1, which is the support, is the first target after you take the sell trade, and we could extend it to S2. So suppose you have taken multiple lots here, you can unload a few at S1 and you can then unload the rest at S2. So this is basically the plan that we have. Now let's go back and see what happened through the day. I'm going to take you plan by plan, stock by stock, and explain to you how the day went by. So we will initially start with Nifty. Now this is a post market scenario of what happened in Nifty. So if you see, the trade started where this is the first point of the day, and we started in the no man's land where there was no trigger neither on the short side nor on the long side. And as we transpired at around 9:20, we breached the sell line. And like I said, once you breach the sell line, that's your trigger for taking the short trade. We took, this is a 5-minute chart, so we took the short trade and we immediately got a move down to S1, which was the first support, and that is where I have indicated that we need to take our first profits out. So if you would have taken 4 lots here or 2 lots here, you would end up taking away profits for 1 lot and continuing with the second lot. But as you see that the market bounced back, when you take the profit for the first lot, the standard operating procedure is that you should trail your next remaining lots to cost. So in this case, what happened was you got your first profits out in the two lots that you had taken. I mean, half the lots that you had taken. So you took a partial booking of profits and you would trail the balance to the entry point. So in this case, what happened was, as the balance could not give you any profits, we came back and we were stopped out for the balance two lots. The first trade gave us the profits for half the position size that you took, and we were out with 29 points. And then you see we saw a bounce in the market. Now yesterday was typically an expiry day, and the sessions are meant to be volatile, and even on an ordinary day, the support is meant to give you a reversal. So when you reach this level, you have to be cognizant of the fact that a support can give you a reversal and can give you a bounce. So that is the reason why I ask you to trail your balance quantity at cost, so that you don't lose anything on that position that you hold at that point of time. You have booked some profits, you are holding some more, but you should not have a loss in that trade. So you will trail your cost, your balance lots to that entry trigger. Now, as you see, as it transpired yesterday on Nifty, we went back up and your loss was triggered. Now, as we went up, we went close to the R1, which was the resistance level. Now, the moment we crossed R1, we were supposed to trigger a buy level. But if you see, we did not close above the buy level in this case, and we did not have a buy trigger. When I give you the buy level, we are supposed to get into the trade when the 5-minute or the 15-minute candle, as the case may be, according to your own plan, you should get into the trade. If you're a safe trader, you will wait for the 15-minute candle to close, and then wait for a retest and then enter. Or you could then, if you're an aggressive trader, you could enter at the 5-minute level as it closes above the buy level. But in this case, we see that beautifully this resistance that I had indicated in the pre-market worked beautifully, and then we saw that the market faced resistance and traveled back and spent some time within the no man's land. It took a retest of the buy level once again, close to the retest, and then it started to weaken, and the journey started to peter out. Once you came down around the 1 o'clock, we started to move again. So if you see here again, we see that there is some sideways movement around the sell trigger, and as we see, when the prices traveled below the sell trigger, and this is where in this case also the candle closed, but as you see, went back and tested. So here you need to spend some time and be active, and be a little patient, and see the price action, and then take this trade. But if you would trust the system allowed you to take a second short, and once the second short came through near the close of the day, we managed to close with another 68 point max possible from this downward trend. So these are the two trades that were possible in Nifty, and we could maximum get 97 points out of the signal that we had from the pre-market plan. Let's move on to BankNifty now. So this is the BankNifty chart. Oh God, we're not at the BankNifty. I'll have to switch to BankNifty. This is the BankNifty chart. This is a clutter here, so I'm going to go to the 5-minute signal, and we'll go to today's levels, and this is today's level. So here you see what happened was, in today's level here, what we did was we did not go above to the R1 at all. We went in, we did not get to our required profit margin here, and we retraced back into the area. Now generally, if you have taken a trade here, and if you have not covered any of your profits at the fall line, this actually gave us about 129 points, which in our case, someone who's scalping would have booked these 129 points, and not had he not waited for the R1, the sub S1. So some of us could have booked our profits, partial profits here also. But having booked our partial profits, it would be a good thing. Once you've seen 100 points below your trigger point, you would put a stop loss, and you would not have a loss situation if the line is crossed inwards. So the best advice is to keep booking profits, some of it even before R1 if you have taken multiple lots. So this will be a part of each individual's individual plan. My point here is not to create an individual plan for you. My point is to give you a signal and give you a reason to trigger your sell levels, and then trailing stop losses, booking profits is a part of your own personal plan. So you will have to build your own personal plan, how to trade the market. What my endeavor here is to give you a signal that seeing the price action, if I see that a particular price point is breached, and which is an important level, and after that breach, the the price is going to travel down. That is the probability that I am giving you. Now, working on that probability, you'll have to create your own plans, and you'll have to decide how you want to treat that trigger point and how you want to trade on this. So if you see in Bank Nifty today, we could have got 129 points at one point, and we could have covered our profits. For now, 129 points on say two lots is about 15 to 129 is 6,000 rupees for somebody who is doing futures, and maybe about 2,500-3,000 rupees for somebody who's doing options at the money options. So that's not a bad amount of money. Anyway, so that's your own plan. And if you see now, what happens on the trigger line is that it keeps being around the trigger line right until 1340, and then as it was an expiry date, the move started, and once we went down, we again took a retest on the buy on the sell line, and look how beautifully we dropped. Now this fall gave us 369 points. I'm not accounting for the 129 points that we got before, but these 369 points were so easy to get at the fag end in the last 2 hours of the day, given that it was an expiry, and it was around the trigger line all throughout, didn't go to R1 also. We got a beautiful fall, and that's how Bank Nifty gave us the day for today. Let's look at the next trade. Now we'll look at copper. So this is the copper trade that was given in pre-market, and if you see, we had indicated that if it is above the buy line, you could have gone and targeted the R2. Now R2, this in copper we give you the level of R1, R2, S1, S2 are for the entire week. They are not for intraday, because predominantly you don't have such explosive moves in in commodities. So here we are trying to give you an R2 level which could be something that can be reached, but maybe in the week, not intraday. So these signals are more to do with a weekly signal more than an intraday. But I will try to give you intraday buy and sell levels, because they will change on a daily basis. But the levels to destination, your targets will probably remain until they are breached for the entire week. So here what you see is that we got a beautiful move. Once the price opened above the buy trigger, we took a trade at the buy trigger, and we got 7 points. And then the market decided to give a little bit of a pullback, and we again retested the buy line, and beautifully from the buy line we again began to rose. So the buy line acted as the real support, and we beautifully bounced back, and you could have got 7.25 is the maximum that I have listed here, but you could have got 14 points if you took the first trade and you decided to take the second trade also in the later part of the day, which was in the evening session at about 18:30 hours, that is 6:30 in the evening. We again got a trigger once the US markets opened, and we saw that the trigger gave us another move. Let's go to the next one. We'll go to crude now, and this is how the crude levels were indicated in the morning plan. And like again, we gave two levels, the buy level and the sell level. If you see the sell, initially the market was weak in the morning, and we fell below. It opened just near the sell level and triggered down. So when we see that there is a trigger down, we would start a buy level, a sell level here, and at this sell level I would normally keep my entry trigger as the stop loss. So this would be my stop loss area, and this would be my target area. So here if you see, the moment the prices began to come down by 4 o'clock in the evening, we met our target in the RS1, which was the support that was indicated. Now here again, we could have booked partial and could have waited for S2, but because it was pretty late in the day, I booked all my profits on the S1 level because I was not willing to take it to a lower level. Now what also I saw the price action, and I saw that this support was acting up because once it took support and then we have a double bottom here. So then around the 6:30 mark, it was very clear that there is going to be a reversal in the market. And if you see, there was a beautiful reversal that took us right across, right above the sell line, and then on to breach the buy line, which was around the 8:30 mark in the evening, and then it took us to the R2 level where we could book our profits. So these are the two trades that were possible in crude. Now these are maximum possible points that you could have garnered. I'm not saying that this is something that you would achieve, but this is the maximum that is possible. Now it is upon our own competence and our own experience over a period of time after following these signals, how we judge the market and we squeeze the maximum out of the signal that we receive. So in any case, everybody has their own trade plan, and somebody would book out early, somebody would book out late, and somebody would take it to the max possible. So this will be different for each individual who is going to look at the market in a different way, but the signals will do their job, and that's what we are here to present. So this signal gave us two trades and it could generate a maximum of 191 points for the day. Let's look at another commodity. So this is natural gas. This was our day plan. Look how beautifully natural gas has given us the levels. The level was just above the S1 and it opened just at the sell level, and it tested the level for a while, and by 3:30 in the evening it began to fall. And if you see, by the late evening, in fact at about 8:30 we had reached our S2, which was the target, and this is how beautiful the trade was. We got about 10.5 points. That's a 5% move on natural gas that we could register today. That's fantastic. A 5% move on a commodity is a fantastic move intraday. This is a bumper trade for the day. Let's go to the next one. Let's go to gold, and this is what we have for gold. This was the intraday plan that we gave you, and if you see again here, we opened and we started to see weakness right away. We went lower and then we had a small retest which did not go to the trigger level, but which was also something that we could have looked at. Now here if you see that we haven't gone to the S2 level, and we have reversed at about 13:30 hours right from the middle of the trade. Now here what we could do is we could put our trailing losses as we keep on creeping down. Now you could have your own individual plan on this. The signal is that it will give you a particular move. Now how much the move is going to be, I'm not going to be able to predict. I'm trying to be as close as possible by giving you the next support and resistances, but all the times the support and resistances are not going to be the levels that it's going to reach to. So the advice is to book profits as you see fit according to your own plan, and trail your stop losses so that you can face these situations where the reversals happen before they reach the support levels and bounce before even the support levels are reached. So because the support levels are what I can see on the chart, but sometimes traders will jump in with their own ideas, and they will jump in way before the support line and create the reversal. So that's not something that I can predict to the key, but the point is that if I can predict the signal of the triggers on the sell and the buy levels, that's a huge thing. Now if you know the adage that support turns into resistance, that is also something that can be used by aggressive traders, though now I'm not going to be making that as a part of my plan. But when you see that this red line was one kind of a trigger, so what was meant to be a support which if broken would turn into resistance. This is exactly what happened. This turned into resistance and we saw the move down. But once this resistance was breached on the top side, you could have taken a trade from the sell line if you see that it could not be breached again to the top of the buy line. Now this is a no man's trading area according to my plan, but traders who are experienced will consider a broken resistance will turn into a support and will take this Q. This is your R1 S1, which was a support. It got breached. Once it got breached back from the downside, it would turn into a resistance, a support, sorry, a resistance. It would turn into a resistance, and once that resistance got broken, it would turn into a support. And if you would use that polarity change technique, you could have taken this trade and which could have given you the profits right up to the buy line. But this is not something which is a part of my plan, but this is something that traders do. So here what we could get is we could garner a maximum of 378 points from this move down. Now you would not probably make 378 points, but whatever you made is good based on the trigger levels, and that's what is what my intent is, to give you sell and buy triggers. Let's go to the last chart of the day, which is silver. We'll have one more. We'll have silver and then we'll have zinc also. So this was the plan for silver. Now here what you see is the day started here. This is the day separator line. The day started here, and we immediately were looking to move around the sell level, and as soon as the sell level was breached, we saw a sharp fall which took us beyond the R1. Now here you would say that it didn't go to R2, and I would want you to book partials here and the rest of them here. So here again your trailing stop losses would have worked. What I would do in my plan is I would book partials here and let the stock and let the price move down, and I would shift all the trailing losses from my entry point to the R1 level. So at best I would recover these points, and then in the second lot I would again recover these points too, which would have given me, which should have survived, which would have saved the rest of the move which went back up, and I would have booked my profits for all the stocks here. Now these are things that you will have to make your individual plan. As you move with my plan, you will have to have a sub plan which will be based on your risk management situations. So what I'm trying to give here is, again I'm repeating myself, our trigger levels. The rest of the destination is something that I pinpoint with my support and resistances, but in the end it's going to be your plan that's going to dictate how you're going to benefit from the triggers that we see here according to your own risk management plan. Again, the same theory. This price line, which is the sell below line, is a kind of a support and resistance. The moment it acted as a resistance here and the resistance was breached, on a retest this would act like a support, and one could have initiated a long trade, which was not a part of my plan, which I would do internally with my own plan. But to make it simpler for everybody else here who's not very experienced, we would just leave our shorts here and then get into a no man's land where we have no trades at all, and then as soon as we breach the upline where we want to buy, we have you buy, we would buy, and then we would try to trail it and get to the resistance line. But in this case we did not get to the resistance line by the end of the day, but we would have closed the trade either at the top here, because you see a double top here, or even if you close it at the end of the day here, you would have had a profit which would have been close to 300 to 400 points. So these are the two trades on silver, and we managed to get more than 1,000 points out of silver on the day in two trades, one short and one long. Let's go to the last trade of the day, which is zinc, and we'll see how zinc performed today. So zinc opened higher above our buy line, and I would want you to trigger your buy right away. So once you trigger a buy, you're opening above the buy trigger. Your first point of call is the R1, but here you see that the R1 was triggered and we got a trail back to our buy. So this was a very choppy day for zinc, but still we managed to get a maximum of 2.3 points. So that's close to a percent on zinc in the first move. And then we went down to retest our buy level, which acted like a beautiful support, and then we again got a bounce which would probably give us 2 points more. So eventually we would have made 4 points from the move in zinc also for the entire day if we would have been active through the day So, in culmination, what I'm trying to give you here is to give you an explanation as to how our charts are, giving these trigger points and how these trigger points can be used to make money from the markets. If you have any questions, do comment in the comment box and let me know so that I can give you more answers. Do join our demo group if you want a demo of these signals. The link will be attached here, and there will be a subscription cost for once you enter the channel and you want to remove when you want to receive these daily levels. There are a bucket of 7 to 8 signals that I give in the day, and it's very nominally priced, and you can take advantage of these signals and you can make money from the markets. To give you an idea, in the entire period of May, for the last 30 days, these signals have generated profits every day. Now, the signals will generate profits. It's upon you to have a risk management in place to benefit from this signal. That's obviously something that you will need to incorporate in your trading. But the signals are working, and that's what the intention is, to give you a demo of what the signals are and how they are working. So if you see, we had 8 charts today that we figured out here, and all the signals that were given in the 8 charts gave you some profits. Now, a scalper would love to have these triggers, because a scalper would trade 20 lots, 30 lots once the trigger is crossed and make money out of those trigger points. I'm not asking you to be a scalper. I'm asking you to be more like a business trader and take these trigger points in your plan and create your risk management plans around the triggers, and see to it that you make money from the signals that are presented every day. I hope this was a useful video. You can subscribe to the demo. We'll attach a link for the demo. You can join a WhatsApp group, and that will take you to the demo. Again, it will be a 3-day demo, which will give you an idea, and you can practice on that demo and then decide whether you want to take a subscription plan or no. The subscription plans are very, very comfortably priced. We are just pricing it at 5,300 odd amount, including GST, for 3 months, for a quarter, and 14,000 odd for an entire year. You can take your pick. It's a very minimal cost for you to get the advantage of these trigger points, and I'm sure once you have these trigger points, there is no way you're not going to make money from the markets. You don't need to learn a lot of things that are on offer. You just need to know the trigger points, and you just need to have a risk management plan, and that's all that you require to make money from the markets. There are n number of things that the market, that the YouTube and all the other things in the social media are trying to encourage you to learn. Yes, I don't want you to discourage to learn technical analysis. It's a beautiful thing. It's a beautiful art and a science, and I would encourage you to learn. But if you are busy and if you don't want to, and you want to start making money from day one, these are very simple things that you can start looking at and start making money. And then on the side, you can start, learning everything that you want to learn, because learning is a process. You learn one thing. I've been in this business for I've been in the market for the last 6-7 years, and I've learned literally everything, but I've realized that my end game is to make money from the markets. And if the more I learn, the more I clutter myself, and the more things I know, the more signals become conflicting. So it's easier to know one way to make money, and then just follow that plan and make money. If you learn too many things, it will give you conflicting signals, and there will be an action paralysis, and one signal will tell you to buy, the other signal will tell you not to buy, and there will be action paralysis, and you will not take the trade. Now, this is a very simple thing here. Now, there's one more thing that people have spoken to me about, and I would add to this plan, and this is at the end of the entire plan that I would want you to take. So there's something that you can add to the plan. You could add a VWAP. So this is a VWAP for the current day, and this is a VWAP for the previous day. So these are the two VWAPs that I would use, and I would want to initiate my trades once I am above the VWAP. So in today's case, if I am above the VWAP, I would initiate the buy trade. In another case, I would initiate a short trade if I am under the VWAP. And so let's take the case of the Bank Nifty today. I am keen to talk about the Bank Nifty because I was live and I was discussing Bank Nifty, and the Bank Nifty, in our Bank Nifty trade today, the VWAP was flirting just underneath our buy signal. So let me take you and give you the VWAP for yesterday and today. So this is the tool. This will give me the VWAP for yesterday, and this will give me the VWAP for today. So these are the two VWAPs that we will follow. Now if you see that for the entire day today, the VWAP was supporting the prices just under our buy line, under our sell line, sorry. And as soon as the price moved under the VWAP, the triggers were easy to get. So to make a little more filter to the levels, you could add VWAP to the system, and once the price is under the VWAP, the sell signal will become more confirmed and once the price is above the VWAP, the sell signal can be ignored. If you're a really safe trader, you can ignore the signal if it's above the VWAP. So I will encourage you to use VWAP also along with you in your trading. You could use a conjunction of yesterday's VWAP and today's VWAP. So these are anchored VWAPs. These are not VWAPs. These are anchored VWAPs. One is anchored to the previous day's open, and today's one is open to today's open. So today's VWAP and yesterday's VWAP will give you a signal, and if you're extra safe, you can follow yesterday's VWAP to trigger your short signal. If you are a little aggressive, you can take today's VWAP and take that as a further filter to your VWAP. So I think I have covered what I needed to cover in this video. I have discussed the signals of the 1st of June, and I have shown you how these triggers work, and I hope to convince you to join me on the demo plan in the first phase, and then after the demo plan you can go back and join the subscription. It's very comfortably priced for say about 100 rupees a day, which is the cost of one trade in brokerage that you pay to any broker that you would trade. Maybe 2 lots, including the taxes. 100 rupees is all that you need to pay as brokerage. For one brokerage cost for an entire day, you're getting the signal for 8 charts. What more can you ask for? And even if it doesn't help you make money, even if it saves you money, it's a lot. And in the end, I'll just give you one more analogy which I talk to and discuss with everyone that I meet. Most of us are parents, and most of us spend a huge amount of money on our child's education. Now, there's no comparison, but just try and understand how you need to figure out the logic of spending so much money on your child's education, who's going into a nursery or going to a KG class, and you are spending 2,000 to 3,000 rupees per month, or maybe at times even 10 to 15,000 rupees a month to get that child to learn just about basic things in life. And here you are getting an opportunity to learn and to get signals that can generate money for you, which can fund everything else in your life. It's a no-brainer, guys. It's so comfortably priced. The advantage is that we are on a digital medium and we can sell it so cheaply because we are looking at multiple numbers to give us that revenue that we are looking at. So in the end, I would encourage you to join me and look to make a profitable journey out of your trading business. Thanks for spending this time with me on this video, and I hope I've added value to the time that you spent with me. Look forward to seeing you on the demo channel, and then on as a relationship on the subscription plan, where then you open up your engagement with me, and I can ask me a number of things that you want to know about the plan. There are other things that I also do. This is a video about the plan. There are other things that I also do, which will come up in the other videos that I will present to you. So until the next video, I'll see you on the inside, and hopefully you will join the demo plan. Do click on the information link also and send us information, because that helps us in sending you emails about other things that we are offering in our portfolio of products that we have. So join us, give a like on this video, subscribe to the video to the channel. You will get more such videos, and be a part of the demo plan and then to the subscription model, and let's make money from the markets. Thank you for spending this time with me. Thanks a lot.